Hi everyone, and welcome to the Buffett and Beyond Weekly ETF video letter, and this is ending Friday, July 14th, 2023. And today we're going over the Semiconductor ETF once again because it is doing so very well, because the top 5 stocks are up 84.7%. Folks, I just cannot believe this. And remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And let's look at the XSD, which is the Semiconductor ETF. And what I want to show you, this green line in here is the 20-day exponential moving average. Blue line is the 50-day moving average, and then the red line is the 200-day moving average. But what I want to show you is up here, since we are topping out, we are overbought on a very short-term time period here. We got a beautiful buy signal right in here when the market went down, and not the market, but when the XSD, the Semiconductor ETF, went down and tested the 20-day exponential moving average, and it jumped up, went up, came back down, tested it again. That was some drop in there, folks, and then it's all the way back up here again. What we want to talk about is the reversion to the mean, because right now this ETF has been following the 20-day moving average ever since we got a big buy signal down in here, and we crossed over the 200-day, the 20-day, and then finally the 50-day moving average, and we've been on a run ever since. But it has been going down to the 20-day moving average each time it reverts. So right now, this is the reversion to the mean, and that's what we expect in here. Well, it just got ahead of itself. You see 2 gaps in here, and this ETF will probably come back down and at least test the 20-day moving average, and we'll see what it does down here, because if it does come down and test the 20-day moving average, the green line up here, this indicator might turn over and we get that divergence that we really don't like. It's a bearish divergence where the market making a higher high and this indicator making a lower high. That's a bearish divergence. We're not sure if that will form or not. You know, just like guessing, will it or won't it? We'll know when this market gets back down to this 20-day moving average. In other words, will it be more of a buying situation, or will it be, look out, get out of the way, because it's going to go down to the 50-day moving average? So that's how this works. But right now, it's doing very, very well. You can't argue with this, folks. Now, let's look at the stocks in this ETF. And we want to look over here. So if we look at the XSD, the semiconductor, we come back over here. We'll go over these numbers in a few minutes. But right now, the XSD is up, and that is the Semiconductor ETF, is up 36.8%, while the S&P is up 17.6%. And these numbers are Friday afternoon, so the market is still open. So the XSD, the Semiconductor ETF, is up double, a little bit more than double the S&P 500. But what about the top 5 stocks that we've had in our portfolio all year long? Oh my gosh, is this number for real? 84.7%, folks. That is astronomical. Now, as we go along, we're looking at one stock in here, Max Linear, which is doing nothing this year. Why is it doing nothing? We don't know, because we don't know an awful lot about semiconductors. We know what they do and we use them, but other than that, we don't know why this company is down or actually neutral for the year. But don't forget, the overall market is not up very far, because even though the S&P is up 17.6%, the Dow is up about 3.5%, and the stocks, and they call them the 492 stocks in the S&P that are not part of this big tech rise and semiconductor rise, those 492 stocks in the S&P 500 are up just 3%. So for the year to date. So the rest of the market is just not keeping up with the top 7 or 8 stocks. And you all know what I'm talking about. You're talking about Microsoft. You're talking about Apple. You're talking about Amazon. You're talking about I said Microsoft. We're talking about Meta. We're talking about Nvidia. We're talking about Tesla. So those stocks are carrying this market here, folks. But look at these stocks here. Yeah, Nvidia is part of this, up 84.7%. Now, here's something I want to show you. What if we took the last 2.5 years, which include 20 and 22, because last year was a pretty tough year for the tech stocks and the semiconductor stocks. So what we ran was not a simulation. These are actual numbers. The S&P 2021 was up, we'll call it 27%. 22, it was down 19.5%. And right now, as I'm recording this, it's up 17.6%. So had you put $1 in or $100 in, you would now have $120. In other words, you're up 20%. So putting $100 in, you'd have 120. Well, what about the XSD? If you were in the semiconductors and you put $100 in, you would now be ahead 34%, or you would have $134. I know these are percentage marks here, but these are formula in these cells. So you would have $134. Now, what if you were in the top 5? Now, we didn't have the same top 5 stocks each year. We changed them once a year and maybe even a little bit shorter time period, but we're fully invested the whole time. And these top 5 stocks were down 36.7% last year. But the XSD was only down 31%, but they're both a lot further down than the S&P 19.5%. But look at the 2021 return of the top stocks that we had then, and we had 7 stocks in the portfolio at that point, up 73%. Then last year down 37%. This year up 85%. So if you put $100 in at the beginning of 2021, you would have $203 right now. In other words, you'd be up over 100%. So let's look at the bottom line numbers and not get anybody mixed up. If you had $100 in the S&P 500 at the beginning of 2021, right now you'd be up 20%, or you'd have $120. If you put it in the XSD, which is a semiconductor ETF, you would have $134 or be up 34%. If you put it in the top 5, and remember our whole theory, when you take any ETF, any index, you have the above average stocks in there, you have the below average stocks in there. What we do is we look for the top stocks, the above average stocks, and then we take our pick out of those stocks. That's why our top 5, our top 6, our top 7 stocks in any ETF is most likely to outperform the ETF itself. We haven't had one that we haven't outperformed, but we can't say it always outperforms just because we have not tested every ETF and the top stocks in every ETF, because there's thousands of them out there. So we can say that if you pick the better than average stocks and the top 5 or top 6 or top 7 stocks out of the above average stocks, you'll wind up, for the most part, outperforming that ETF most of the time. And let's look at it one more time, folks. The XSD is up almost 37%. The S&P up 17.6%. The Dow, which is not shown here, is up only 3.5%. And our top 5 stocks up 84.7% for the year. And that's year to date. So, folks, if you want to keep abreast of these stocks and see what we're doing and see when we change, sign up for our 2-week free subscription. You just need your name and email. We don't even need your name. You could put your initials in there or something. Just need your email address, because we send out a letter every day and 3 on Saturday. So go to BuffettandBeyond.com. Buffett is spelled with 2 F's and 2 T's. www.BuffettandBeyond.com. You'll see subscribe and the 2-week free subscription. And then you'll be off to the races, folks. And how has our 30-stock portfolio, our growth portfolio, that is fairly much buy and hold, and we change about 5 or 6 stocks a year, actually, out of that. Since the end of 2002, we have returned over 1,000% where the S&P 500 has returned 377%. So in the beginning of the year, we tell you what stocks to replace, what stocks to sell, what stocks to buy, and there's only a few out of 30, equal weight in the 30 stocks, and then you go to the beach for the year, folks. That's all you have to do. And you would be up 3 times the market averages. And remember, 96% of professional money managers who manage the publicly traded mutual funds, because we can follow them on a day-to-day basis, 96% of those professional money managers cannot outperform the S&P 500 over any 10-year period. 96% cannot outperform this index. But if you know a methodology that can do that, and we use the clean surplus accounting method, which is the link between accounting and finance, folks. If you can follow that, which is on our computer program, which is on our site, then you can get these kind of returns, outperform the S&P 500 index over the long term, and thus you'll be outperforming more than 96% of those professional money managers. So, folks, we've had a good week this past week. So you go out, you clear your head, go for a walk on the beach. I know it's supposed to be hot this weekend all over the country, so stay in the shade maybe. But go out, enjoy yourself, have a good weekend. Most of all, stay safe, be with your family, and folks, we'll see you back here next time.